Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar started last week strong but lost momentum toward the end, finishing slightly lower on the weekly chart. It's now struggling to hold above the key 100 level, right around its 200-day moving average. With the US government shutdown delaying key economic reports and weak labor data adding pressure, investors are losing faith in the dollar's safe haven appeal. Markets are now pricing in more Fed rate cuts ahead, suggesting the dollar may stay soft in the months to come. WTI crude traded slightly below $60 early in the week, ending Friday marginally higher. Investors are watching US political developments and renewed tensions in Gaza. Meanwhile, the prolonged government shutdown is hurting economic activity, even forcing major airports to cut flights. Demand concerns are weighing on prices, while OPEC Plus confirmed a modest December production hike but paused further increases next quarter. Adding to pressure, Saudi Arabia cut its official selling price to Asia, signaling abundant supply and uncertain demand. Gold surged past $4,100. The rally came as a weaker dollar and US government shutdown fears boosted safe haven demand. Wall Street's tech-heavy Nasdaq suffered its biggest weekly drop in 7 months, driving investors back into gold. Renewed geopolitical tensions also fueled risk aversion. With markets bracing for potential Fed rate cuts and global uncertainty rising, gold remains one of the few bright spots for cautious investors. The yen is trading around 154 inches early Asian hours, holding firm despite softer US data. The yen weakened after uncertainty grew over the Bank of Japan's next rate move. Japan's new Prime Minister Sanae Takaichi is preparing a $6.5 billion stimulus plan by late November, while the central bank remains hesitant to tighten policy. Meeting minutes show more members leaning toward rate hikes, but not yet ready to act. With US consumer confidence sliding, downside pressure on the dollar-yen could still emerge. The euro traded around 1.155 after 3 straight days of losses, pressured by a firmer dollar as reports suggested the US government shutdown may soon end. A bipartisan Senate group has reached a deal to reopen key agencies, while Treasury Secretary Bessent said inflation progress continues. Still, euro-dollar sentiment may improve longer term as diverging policy paths between the ECB and the Fed become clearer. With Europe likely to keep rates steady while the Fed eyes cuts, the euro could regain strength ahead.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.